Hello and welcome to Portfolio Matters, weekly markets checklist, week 212. And there is still a hell of a lot going on in the world. But before we get into it, Richard will read the disclaimer.
Thank you, Keith. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. What do we have, or even surprise me, Keith, what are we going to talk about today?
Well, we've got a lot to talk about, Richard, and sadly, not much of it is good. Um, But before we get going, some quick housekeeping. Apologies that this episode is a bit late to fit into our schedules. We hope to get back to the normal service in 2 weeks' time. Okay, so the war in Hormuz continues, but the UK has plunged into political turmoil after the local elections on the 7th of May, during which the Labour Party lost an astonishing 1,498 seats, which prompted turmoil within the ruling Labour Party. So, five ministers have resigned, 90 MPs have urged the Prime Minister to resign, but as yet, there is no formal leadership contest. A formal leadership contest within the Labour Party would require either Keir Starmer to resign or 20% of the MPs to nominate a challenger. That has not happened. So we're sort of in limbo as we await the return of Andy Burnham. So Labour MP Josh Simons is standing down in the Makerfield constituency, triggering a by-election with Andy Burnham due to run, and he's the favourite, at which point he'll return to Parliament, and we expect a leadership contest to be triggered. He is the favourite to become the next Prime Minister. So we're
Any
sort of in political limbo until that point. Some charts related to that. So sadly, the UK's traditional two-party system is breaking down, as we've discussed last episode. Um, as you can, so the chart on the left shows the electoral map 5 years ago only. So basically, the older you get, the more conservative you became. Whereas now, young people are voting Green, old people increasingly voting Reform, and the two-party system has totally collapsed. We now have five parties. And this is what happened in the local elections. Huge swing to Reform away from Labour, with Liberal Democrats gaining some seats, but Conservatives also doing really badly at the expense of the Green Party. And Andy Burnham is odds-on favourite to be the next Prime Minister, and the bond market and sterling have not taken all this turmoil well. Richard, your thoughts?
Could you just change the photograph, please, Keith? Thank you. Um, so I think there's I think there's two fundamental issues, two fundamental problems here. One is the reason the Tories were so roundly defeated at the last general election was people were absolutely fed up with their incompetence, their arrogance, their conceit, but also with the constant politicking and manipulation and putting of personal careers above the good of the country. And I think that fundamentally that's why the Tories were roundly defeated. Certainly, that's what I most thoroughly disliked about them. And of course, Labour came in on the basis that they would correct all of that. So, and here they are, sort of going again for the cult of the personality. And in the case of Andy Burnham, so I think in the case of Andy Burnham, what they're actually saying is we're going to have someone who didn't have the guts to stand at the general election, if you like.
Yeah.
Is now going to go to what hopefully he considers to be a safe seat to become Prime Minister, elected
Yeah.
by about 15,000 people. It's a complete disgrace and a total abrogation of the democratic principle. I think it's utterly appalling. And
Yeah.
it's the sort of thing that the Conservatives would have done, only actually worse. So that's one point. The other point is Labour fundamentally misunderstands, in my mind, why it is that they got elected at the last election. They got elected at the last election because the Conservatives were so appalling, not because Labour was so good. And by going left, Labour becomes more appalling. Sorry, Labour is not going into the direction that that the electorate who voted for it wants it to go in. They want it to be the middle of the road socialism. So, relatively right wing. And so I personally think they misunderstand why they got elected. By putting in someone who's more left wing as a prime minister, they will actually worsen their future electoral chances. And what they're doing is, as I say, fundamental abrogation of democratic principles. I'm really cross with them. I think it's a disgrace.
I don't disagree with anything you've said, Richard.
Thank you, Keith.
Um, I'm just worried what comes next. So Andy
Take that picture
Burnham,
away.
viewed as soft left, he has in recent days blamed the UK's decline on the four horsemen of the apocalypse, which are, in his view, deregulation, privatisation, austerity, and Brexit. Now, austerity, has he looked at the fiscal deficit? I
It's
mean,
just nonsense. I mean, austerity was 2011 or whatever it was with Osborne. It's like there hasn't been austerity for. I mean, look at Rishi Sunak, the most profligate chancellor
yeah,
ever in history.
I know. So the good thing is that after sterling fell and the bond market fell, so yields shot up in the UK, he has attempted to calm markets by stating that he would keep to the current fiscal rules. Now, I don't see how he can do that while trying to reverse privatization and reverse
He's a
austerity in quotation marks, unless he massively hikes taxes.
He's a
So,
Trojan horse, Keith. I mean, there's deregulation. There is no deregulation. This country has far too much regulation. All we've ever done is talk about deregulating while regulating more. Privatisation, the problem with privatisation was the water companies and the regulators, which
yeah,
were utterly appalling. And the privatisation of the rail service, which should never have been privatised because you can't run an unjoined up network. And that could be fixed if they wish to fix it, but that's not the problem of the UK's decline. I mean, it's like there's specific issues. The guy hasn't got a clue. I mean, it's
yeah,
like this is
yeah.
absolute drivel.
No, I totally agree.
I'm so
Actually,
cross.
on the
So cross.
deregulation, the problem in this country is not that we don't have enough regulations. We've got regulations on absolutely everything. The trouble is that we have hollowed out all our institutions to pay for social spending, and we don't enforce any regulations.
Yeah.
So,
Um,
the water companies being a very good case in point.
and where does energy prices fit into the four horsemen of the apocalypse? It's one of the major causes of current industrial decline.
Yeah,
I mean, it's just nonsense. And I completely agree with you, Keith, about the privatisation of the water companies was a total failure of regulation. It was a complete failure of government as well. I mean, the Conservatives should have fixed it back in,
yeah,
10 years ago. And
yeah,
presumably they didn't because the financiers of the city had their hands up their back. But the whole, it's a complete, and this is the mess that they were brought in to sort out, not this
yeah,
sort of let's tax and spend and let's push the British economy back into some earlier era, which is where we're going. It's like their diagnosis of problems is so wrong,
yeah.
and it's just take that
Well,
picture away.
yeah, well, I don't think they're going down very well with the electorate or with the bond market. Although to be fair, there has been a global bond sell-off
Yeah,
on oil prices,
yeah.
which we will get to in due course. Sterling also didn't take it badly. Sterling also didn't take it well, although it's recovered a bit after he pledged to stick to the fiscal rules. We can but wait and see what happens. But this is going to be a prolonged period of political uncertainty, which the bond markets are not going to take well.
I rather hope that I don't know if it'll happen, but I hope that Burnham gets kicked, and that the electorate in Makerfield see see him for what he really is, which is basically someone who wants to manipulate them into making him prime minister.
Yeah.
I mean, it's disgusting. I actually find it disgusting. I think it's
Yeah.
appalling. It's
Well,
absolutely
I'm
shameless.
also quietly hoping that the voters of Makerfield give Labour a bloody nose because they're
Completely.
not popular. Um, Now, after that, on to war news, something cheery. So I'm not going to go through all this. Please pause and have a read. What you need to know is that over the past couple of weeks, the strait has remained mainly closed, although some tankers have got through by turning their transponders off. We'll take you through the data in due course, but there has been this sort of low level breakages of the ceasefire, particularly by Iran. So, Iran a couple of days ago sent some drones that hit a nuclear power station in the UAE, which was a serious escalation. They've also seized vessels in international waters and taken them back to their territory, one of which was a floating armory used to resupply the guards that protect cargo ships in the Straits. So, not great. And
So,
gone.
I was listening to a theory that the reason for the attack on the energy facilities, the nuclear power station, was not to attack them per se, but to say to the Gulf states and to the US that if you restart the war, the ballistic war, this is what's going to happen.
Yes, I
It's
totally agree with that.
sending a message.
Yes.
And it's interesting, isn't it, that Trump sort of states, well, I was going to start bombing them all over again, but I've decided not. Basically, he's just full of bluff and bluster, and you never know what the truth is with him.
Yeah. Um, so Trump, as of yesterday, was stated that serious negotiations are taking place, and he has refrained from proposed military strikes on Iran as of yesterday at the request of the Gulf nations, probably for the reasons Richard's just stated. Now, Iran 2 weeks ago released a new map showing its claims over the Straits and established a new body, the Persian Gulf Straits Authority, to control transits through the Straits and charge tolls. And it gave a details of how you should pay for those tolls. So charts relating to the war, these are global inventories, they are falling rapidly. And JP Morgan estimates that we started the year with 8.4 billion barrels, but of those, only around 800 million can be drawn before the oil system enters operational stress. And they're saying that would begin in September. So you can't draw down all those inventories before the whole system gums up. Now, why is that the case? Well, the just like the human body, the oil transit system and processing system requires a minimum levels of stocks to keep itself alive. The analogy is with the blood in circulation in your body. You die long before you've lost all of it. After you've lost about 40%, all the systems cease to function. And the same is true with the oil system. So below the minimum, which JP Morgan is saying is about 7.6 billion barrels, pipelines leave pressure, refineries go offline because refineries need to have 60 to 75% of maximum flow as their bare minimum. Under that, they can't safely process the crude. The distillation and fractioning columns cease to operate. At that point, you lose the much of the system. So the nightmare scenario is after we hit the minimum, refineries shut. 3 days later, you get product shortages at terminals. 7 days later, fuel rationing at petrol stations. Supply chains begin to collapse.
So this is a sort of this is a bit of a distortion, isn't it, Keith? Because in fact, what we're talking about is a 10%, roughly speaking, 10% reduction in global supply. So you would presumably, you wouldn't have all the refineries shut down,
Yeah.
but you keep some refineries operating and other refineries would shut down. So let's say 10% of your refineries shut down because they don't have the right feedstock, just
Yeah.
wild guess. So in fact, what happens is you get production shortage at certain terminals and then everything cascades through.
Yes.
And rather than collapses, you get stress on those supply chains. They shorten, they contract, demand drops, food prices go higher, and the countries, I think we're talking now international, other countries that can least afford to buy food
Yes.
suffer starvation crises.
So, what this is essentially saying, Richard, you make a good point, is that essentially from September, you can no longer keep on drawing down inventories.
Yeah.
That is the bare minimum needed to keep the system going. At that point, as you say, if we've lost, so let's say 7 million barrels a day from the oil system, we will have to see demand destruction of 7 million barrels a day.
Yeah.
At that point, the oil price goes ballistic. Now, we've got a few months yet before that really happens. In the meantime, the oil price is actually pretty stable.
So I read the other day that all of the tankers that left the Straits of Hormuz before the war started have now arrived at their
Yeah.
final destinations. And so there is no more oil en route from the Straits of Hormuz. It's quite interesting. And of course, what that means also is that if the Straits of Hormuz reopen, it's going to take 6 to 8 weeks for those tankers to begin to arrive again, even
Yes.
on the basis that the stock is there to refill them straight away.
Yeah, absolutely. So actually, you need to get this sorted by August, really. And
Yeah.
you're going to start to see increasing stress before then. But right now, the oil price is pretty stable. And as we're drawing down inventories, there is remarkably little disruption to the world. So this is the number of flights. Got it very excited at the start of May as there was a big collapse in the number of flights, but it's since recovered. Jet fuel stocks will start to run out in the coming months, apparently.
So, of course, the UK is now accepting jet fuel from Russian oil as long as it hasn't been refined in Russia, and diesel. It's like, this is,
Yes.
how many angels can you balance on the head of a pin type argument, isn't it?
Yeah, absolutely. But the bottom line is we've started accepting Russian oil. I thought this is interesting. This is a visual illustration of supply chain disruptions. So, in Japan, the biggest crisp maker has switched to black and white ink for the period because he can't get a color ink.
They haven't gone back to paper packaging yet, though, have they?
It's coming, Richard.
I mean, think of all the plastic packaging we throw away that comes straight out of oil wells. That's all going to go,
Yeah,
isn't it?
well, that's true. Now, in Norway, they're responding to future, tightening of the energy system by reopening three gas fields that they closed in 1998. Yeah,
Interesting.
a well-run country.
Yes, Ed Miliband would do well to go to Norway and have a few lessons.
Yes, can we keep him there? Um, so on Richard's point, it takes between 12 and 16 weeks from the moment a cargo of crude oil leaves the Gulf to the refined products hitting the forecourts of US gas stations. So disruption will linger for about 3 months after the Straits reopens. Another illustration of supply chain stress is that this US auto parts retailers reporting supply of the largest drop in supply of lubricating fluids in the modern history of America. Yeah, this is going to have unexpected side effects. Insider trading continues.
It's an interesting point. So, this is a bit of an aside. You may not want to include it, Keith, but so modern internal combustion engines are very finely machined to
Yeah.
very tight tolerances. And as a consequence of that, they require synthetic lubricants, so effectively manufactured lubricants as opposed to also, I guess, oil that comes out of the ground. And you can't lubricate a modern internal combustion engine with non-synthetic lubricants because the lubricant doesn't work very well.
Yeah.
Yeah, which means that if you can't lubricate your engines, you're in trouble, aren't you?
Yeah. But I've said people have generally have stocks of lubricant. You don't use that much lubricant.
And you don't need to change your oil all the time. I mean,
Yeah.
you could defer your oil change,
Yeah. Well,
but yeah, but the world does run on lubricated internal combustion engines.
yes. Well, my car
Did
goes for in for its service today, so
good
let
luck.
fingers crossed. So the rise in oil prices and the fear of further rises in oil prices has led to a huge jump in global bond yields as people fear return of the 1970s and a surge in inflation. So in particular, look at Japanese JGBs, the 30-year. That's astonishing. And that will have inflicted massive losses on Japanese long bond holders. And they're probably the banks and the pension funds. The UK, hurrah, we're winners. Highest bond yields in the developed world.
Yeah.
Now, we've been very skeptical about this chart, but if we get a big surge in oil prices, then it could happen. That's what the market fears. Now, none of this is good for Trump. So US voters increasingly disapprove of him because they're worried about the economy. Now, where are we on the peace proposal? Pause, have a read. These are the main peace proposals as of 2 days ago. And the sticking point is nuclear. Iran has committed to not pursue a nuclear weapon, but has not provided any commitments about suspending uranium enrichment or handing over its existing stockpile of highly enriched uranium. Trump called the earlier proposals garbage and has rejected these. So, so the latest BCA research data, well, this is Iran attacks on its neighbors. Note the drone attack on the UAE nuclear plant a few days ago, but in general, the ceasefire is holding. Israel and US have not attacked Iran, but we still have over 9 million barrels a day off market from the Gulf, and not much of it is getting through, frankly. Supply chain stress is rising very rapidly. So the bottom line is the straits remain blocked and the oil price has reached a high plateau as we draw down inventories and supplies are actually okay, but that can't carry on forever. As we discussed earlier, we get to September, things start to fall apart. So if we ignore what Trump has said recently, that serious peace negotiations have begun, then what is our prognosis for how this goes? Well, Iran is sending mixed signals. It appears in no hurry to end the war, as its recent attacks on the UAE and seizing ships in the Gulf show that it is not backing down. And if I was Iran, I think my strategy is to close the straits for long enough that the oil price goes through the roof and that causes Trump to back down. And in the meantime, to string him along with negotiations so that he doesn't attack me. So I think that's what they're doing. Richard, your thoughts?
It makes perfect sense, doesn't it, Keith? Just think, keep the pressure building on Trump to the point where he has to back down. And there was this interesting comment the other day. I heard someone said Trump's main ambition now is to get the Straits of Hormuz opened. Well, they were open 9 weeks ago. I mean,
Yeah.
and Iran is increasingly seeing that it has a very powerful negotiator because it's got nothing to lose, has it? You know, it's a pariah.
No.
It's a pariah. It's already sustained huge damage from the U.S. bombing campaign, and doesn't really. I mean, it would like to come back into the international enclosure, no doubt. But why should it be in any rush to? And you know, the misjudgment of what's going on. The other, do we talk about China later?
No, we don't. You
So
go.
the other interesting thing is that China. Trump had his much vaunted trip to China, out of which appears to have come nothing very much.
Yes.
Because you can bet your bottom dollar if there'd been anything in it, Trump would have been blasting all over the airways. So effectively, China said, "Nice to meet you, and we're not going to help
Yeah.
you with the Straits of Hormuz. You made your bed, you lie in it." And we've got massive stockpiles of oil, and it's your problem. You fix it.
Yeah. Yeah. I agree. So on that other news, actually, I'd forgotten about the Xi Trump meeting because, as you say, nothing came out of it. So added to this list should be that.
Yeah.
Now, but Cuba has run out of petrol and diesel and will be going back into the Stone Age as a result of the US oil embargo. So, will Trump attempt to get a win there to distract everyone? The US has also threatened to raise tariffs on EU car imports from 15% to 25% after accusing the EU of not complying with its previous trade agreements. So, in the background, the trade war continues. And we've also got the Ukraine war, where actually Ukraine seems to have fought Russia into, at worst, a stalemate. The Institute for the Study of War no longer believes that Russia will continue conquering territory and eventually gain Donetsk.
The extraordinary thing about Ukraine, the completely extraordinary thing about Ukraine is that if Russia's army had been the least bit competent when they invaded Ukraine, they would have achieved their objectives within about a fortnight. But they weren't. And so all of this mess is a consequence, if you look at it from the point of view of Putin, all of this mess is a consequence of not ensuring that his army was competent.
Yeah.
And
But
it's just like extraordinary.
absolutely. And the way they're prosecuting the war with these what are called meat waves as they
Yeah.
send conscripts straight into their doom is ineffective. Now, a viewer, Frosty, sent me a very interesting piece which talked about the effect on warfare of the drones
Mm.
and how they basically allow the small nations to defend themselves against anything.
Yeah,
So,
apparently the IDF is now suffering significantly from Hezbollah operating drones against them for exactly the same reasons that the Russians are. You know, the defenses aren't in place, and
yeah,
people and equipment are incredibly vulnerable to drone attack.
yeah. So I think that actually the advent of drones will mean that, aggressive warfare is going to be very difficult to achieve. Going to be very difficult to achieve territorial gains,
Troops on the
um,
ground.
troops on the ground, until you have a solution to drone attacks.
Yeah.
Now, Kevin Walsh will be sworn in as the new Fed chairman today, I believe. And the UK, I mean, this tells you all you need to know about the Labour government, has asked supermarkets to cap prices in a sort of Stalinist, price control system. Doesn't work. It will
I was
lead to
just,
shortages.
as you know, I don't really rate the Today program because all they seem to be interested in is controversy and not really
Yeah.
interested in understanding the issues. They're more interested in creating or generating or um,
Yes.
controversy. I seem to have gone out of focus, have I? Oh, that's better. Um, but I was listening to it this morning, and there's a guy from the supermarkets who was representing the on this proposal, and basically said, look, the government's done everything it can to increase our cost base with
Yeah,
taxation and regulation, and now they're asking us to cap prices where it's just an impossibility. We don't have the margins to do it, and they should
yeah.
go away and look. The whole thing is complete nonsense, and it's just Rachel Reeves floundering around, and then she'll come out and she'll blame the supermarkets for not. It's like it's just dribble, and they're so. Sadly, the Conservatives. This is not political with a capital P. Our politicians, in a general sense, are not competent.
Yeah. Well, I listened to Kemi Badenoch's speech in the House talking about the Labour leadership election, etc., and I was very impressed. I
Good.
increasingly like her, actually.
We need some impressive. The one thing she doesn't do, I think, that she needs to do more. She needs to criticise the past Conservative policies and the past Conservative government, and actually say it is a clean break. They were dreadful.
Yeah.
Boris Johnson was appalling, and she needs to be quite clear that it was not acceptable, and it is not acceptable. And
Yeah.
they don't do that enough.
Now, actually, one thing we haven't talked about, Richard, is Brexit, because the various Labour candidates are talking about rejoining the EU. Now, my view, and I not only voted to remain, but I campaigned for remain. Is we can't do it. There's just no way that, and if I was the EU, I wouldn't want us back until we have sorted ourselves out and have a firm opinion either way. Coming back where a big chunk of the electorate still, would still want to exit is a recipe for further turmoil down the road.
It's so unstable, isn't it, Keith? I mean, why on earth would the EU say why would they welcome us with open arms when we
Yeah,
have created such instability, and that the instability created hasn't even been resolved,
yeah,
and so it would be stupid. Also, that even if you were to say let's rejoin Europe tomorrow, that doesn't solve any of our issues. That's not the problem. The problem is that we are so badly now. The problem is that we are so badly governed internally.
yes. That's another point,
So we
Richard.
need to get that sorted out first. Then we
Yeah,
can say, do we want to rejoin Europe as a strong partner, or have we got ourselves sufficiently sorted out now that we're happy to be outside Europe? Um, I don't know the answer to that question, but we've got to solve those. Looking for some scapegoat to say, oh, well, if only we hadn't done this, then we wouldn't be. Our politicians are responsible for a
yeah.
vast quantity of the mess that we're in. They need to sort it out.
Yeah, no, that's true, actually. That's another good way to put it. Brexit has given us freedom. How have we
What have we,
used that?
what have we done with it? Yeah,
Yeah,
and look at people like Miliband and
yeah,
absolutely having no concept about what our energy policy should be. We need to get those things fixed.
yeah,
Then if we want to go back into Europe, we go back into Europe strong,
yeah.
not as a weak supplicant.
We'll have some cheery stuff later on, I think.
When's that? Well,
Uh,
next year.
yeah, exactly. So charts related news. So the Federal Reserve has been quietly increasing the size of its balance sheet, and actually
Yeah,
not by small numbers.
no, it has, hasn't it?
That's like, 200 billion in the course of the last few months.
So what's it actually doing?
Well, it says it is providing liquidity to the banking system, not QE.
So, of course, it is. I mean, whatever. But
Yeah.
is it buying
It's
poorly
buying
rated?
treasuries. It's buying treasuries to provide liquidity to the banks.
So if you listen to Jim Rickards, he says that QE isn't really QE because the money that the Federal Reserve uses to buy the treasuries off the banks put that money straight back into reserves at the Federal Reserve, but that doesn't create liquidity. So Jim Rickards is either wrong or he's being partial with the
Mm,
truth, because clearly QE does create liquidity in the market.
yeah. Yeah. I don't disagree, Richard.
There's a
Uh,
lot of smoke and mirrors about this.
yeah.
I'm generally speaking, untrusting sort of person. And a lot of these people, I don't really trust what they say, especially when they say very simplistically, "Oh, we can't be because."
Well, the rise in the gold price, as you correctly predicted, has been, you've been right. Um, On to economic news. So we've had US inflation numbers for April. They rose 0.6% month on month, 3.8% year on year, largely energy related. There is little sign as yet of second order inflationary effects, but to be fair, those would take a little while to come through, you'd expect. Non-farm payrolls beat expectations at plus 115,000 in April, although consumer confidence fell to an all-time low in the Michigan survey. But all the nowcasts are stable at solid economic growth, and the latest short-term Lantern Daily Economic Index is rising quite rapidly. So the US economy seems to be stable. But although inflation is rising, so having not higher nominal GDP growth, which is bad for bonds. In the UK, we had this morning inflation numbers which were much better than expected. So core CPI fell, so CPI fell to 2.8%, core fell to 2.5%, and RPI massively beat expectations at 3%. So although the month on month numbers for inflation were not great, actually they were all much better than expectations. Continuing the good news, Richard. GDP in Q1 was 0.6% quarter on quarter, the best in the G7, and we had astonishing GDP growth of 1.1% year on year.
Fantastic. What is the error rate? What is the error in predicting GDP measurement? Plus or minus 1% or so?
Yeah, probably that. But
I mean,
worse than that, Richard, like 43% of the UK economy is now the government sector. And,
yeah,
how do you measure
the GDP.
productivity or output of the NHS? Answer, you don't really. What you do is you take the inputs and assume a sort of level of productivity to get to the output.
That's a very good point, Keith. I mean, what is the GDP of the non-public sector economy, and what's happening there? That's the
Yeah,
40.
that's
How much
true.
did you say it was?
43%.
43%. That's disgraceful.
From memory, and it's getting worse. I mean, in France, it's over 50. And that's the way we're heading. If Andy Burnham gets his chance, it's going to be shoot up if he, renationalizes loads of loads of industries. Returning to the UK, employment data was mixed. So the labour force survey said that we had job creation of 148,000 in the 3 months to March. But then HMRC payrolls show the opposite picture, showing actually we lost 100,000 jobs in April alone, and the March numbers were revised down, plus the unemployment rate rose. So I don't see how the labour force survey figures are compatible with the rise in the unemployment rate. Construction output is falling, construction PMIs were terrible. House prices are falling, as you would expect, with bond yields rising and mortgage costs rising. In the EU, not much data. Producer price inflation in March rose 3.4% month on month. So everywhere an inflationary surge is coming. Retail sales fell for the second month in a row and were only up 1.2% year on year. The construction PMI was very poor, as you would expect. Now, GNS Economics have fed March and April economic data into their model, which forecast OECD leading indicators, and they're forecasting that just based on the March and April data alone, we are going to see a recession. You're muted, mate.
Thank you. Can I just comment on that, okay? So if you look at the scale on the left-hand side, it's
Yeah,
tiny.
that's true.
So what do these movements really represent? Also, I have to say, the other thing, it really reminds me of the inflation prediction graphs. In other words,
Yeah.
the right angle change of direction.
Yeah, no, I agree. I agree with your points, but a recession is any drawdown of more than 0.5% essentially. So you don't need much of a change. It's more that it's the period you define a recession by periods of contraction rather than, the size of the
Yeah,
drawdown.
excellent.
But higher oil prices, higher interest rates, when as
Mm.
measured by bond yields, are going to have an effect on the economy. Full stop.
Well, yes, unless I mean there are two ways of addressing it. So higher interest rates, I think, politically unacceptable. So the solution to that is yield curve control, which means QE, which means that the currencies are drop. What they drop against, I don't know, because if everyone's doing QE, they drop against.
Yeah,
So they actually
gold.
what they drop against is some stable, um, something stable like commodities, hard assets,
Mm.
real assets. My suspicion is that rather than having interest rates going up, we will move back into the realm of QE, and it's probably going to be the last gasp of fiat currencies in some way, but it might be a very long-lasted last gasp.
Well, the thing is, Richard, I'm the in the UK, we are still doing QT. Despite the fact we have got the highest long bond yield since the 1990s.
Yeah, that's a good point.
You know, the Bank of England, I don't know what the Bank of England's been playing at. We have been talking about this for a year, where, QT is bad for the budget and, it's bad for investors and everyone by keeping bond yields high. I don't know what the Bank of England is attempting to achieve at this point. And, the first step should surely be to stop QT.
I think I neither agree nor disagree, Keith, in the sense that you're quite right. Why are we doing QT when our interest rates are going up? But of course, actually, ultimately, the issue is there's far too much debt in the system, and that has to be resolved. That has to be resolved
Yeah.
somehow. And how will it be resolved? Well, it's going to be a mess.
Yeah, that's true.
So,
Although, the UK does have a plan for bringing the deficit down. You know, the question is, will it stick to it? Because,
well, we don't really have a plan because what we've got is fine words of the government that they want to bring it down. But I mean, you say, I'm saying the same thing, really, Keith. Will they stick to it?
yeah,
And the
well,
answer is no.
they've got rising taxes. If Andy Burnham comes in, everyone is going to fear no.
If Andy Burnham comes in, it will be the end of the Labour Party
Well,
at the next general election, and it'll never be really. I think it will be the end of the Labour Party. I suspect the Conservative Party is not dead, but it's certainly on life support.
yeah.
But if
No,
Andy Burnham comes in, I think
I
it's finished.
think the Conservative Party will come back, actually. I mean,
I hope so because we need a
we do.
sensible.
Yeah. Um, But we will, if Andy Burnham comes in and they keep on raising taxes, in particular, he's talked about normalizing the rate of capital gains tax with income tax. That has huge implications. Basically, you need to strip out of your portfolio anything you can't hold forever.
Yeah.
And on to equities, Richard.
Hey, Keith. So equities have done well so far year to date, generally speaking. And in last week, the last period since we had the last portfolio matters, the FTSE All World's gone up by 1.4%. The All Shares very slightly down. The stocks Europe unchanged. And the S&P 500 is up 2%. Keeps hitting new all-time highs, doesn't it? I believe.
Yeah.
Russell 2000 down nearly 2%, and Nasdaq up 4% because the AI boom is still in full flood.
Yes.
Hang Seng almost unchanged. The topic's up 3%. Bitcoin down a little bit. The pound down against the dollar by 1.4%, but unchanged on the year. The euro against the dollar, very similar, actually, pretty much unchanged on the year. The dollar index just 1.1% on the year to date up. And the VIX, very, very low indeed.
Yeah. Exactly. I mean, what's interesting is the Russell 2000 coming down while the Nasdaq continues to go up. I mean, that
Yeah.
tells you that the market is concerned that the real economy is going to start suffering, whereas the magic economy can keep on growing.
and I think I genuinely think that there is a big AI bubble for lots of reasons, including hype
Yes.
about what it can do, and that it can't actually do what
Yeah.
its opponents say it can do. But what I don't know, and that bubble extends to data centers and all sorts, what I don't know is how it resolves itself and when it resolves itself.
I agree. And I think we've got some charts coming up. We can discuss this more later. But I think what's going on is that the all this investment by the hyperscalers, etc., is just feeding through into earnings for everyone else, and in particular hardware companies. And as long as this investment bubble, because it's not sustainable,
So,
continues, then you get this surge in earnings. And also, but when you look into the you know, earnings this quarter, the huge earnings for the tech companies, a lot of that is revaluing their stakes in Anthropic
yeah,
and other startups.
yeah. And also, Keith, so you've got NVIDIA, which is got massive earnings from selling its GPUs for data centers. So that goes straight into the P&L account. And then the purchasers of the GPUs aren't net depreciating them. And so there is no offsetting depreciation charge. So earnings are overstated. And at some point, that has to
Mm,
reverse, and you will then
yeah.
find the depreciation. So, and of course, the other point here also is that a lot of these companies are not listed. A lot of the AI companies aren't listed. So, NVIDIA gets its massive earnings, even if Anthropic, for example, were to write off its GPUs tomorrow, it wouldn't affect earnings in the NASDAQ because it's not in the NASDAQ.
Mm,
So there's a big sort of there's all sorts of smoke and mirrors going on in terms of the accounting because they're different entities and the accounting they don't necessarily account symmetrically for these things. In fact, they're not accounting symmetrically, and they're all
mm,
accounting for their own personal best case. And at some point, it all has to coalesce, and there will be
yeah.
there will be a big washout, a very very big washout.
Yeah. Well, I really like your point about depreciation, Richard. I think that's a good one. So sorry, carry on. Charts.
So there's the FTSE All World Equity Index.
That looks like short-term peak, it says. Difficult to know.
Difficult, does a bit, doesn't it? FTSE All Share.
Yeah. Seem to have stable, not going anywhere.
Yes, plateaued for a while, hasn't it? The stock 600, S&P 500, the Nasdaq.
Astonishing rise, given everything that's happened. Amazing.
The Russell 2000 also did pretty well actually, and the Hang Seng. Topics. There's Bitcoin, the pound against the dollar, been basically in a range for a long time now.
Mm.
The euro against the dollar. I don't see the dollar index falling actually. Well, all of these countries are beset by the same problems. I don't see why the dollar index should drop.
Well, you're right. It's been rising.
There's the dollar index, yeah. And the VIX still very low. Momentum stocks. This is driven partly by ETFs, isn't it? Of course,
Yeah.
which
Well, we've talked about, and I bought, and I have to say that I've sold them. I just saw this and just thought this is just nuts.
what did you
Um,
buy, Keith?
I bought we talked about this previously. I bought the Momentum ETF, the iShares Edge Momentum
Right.
ETF, and I just thought this, everything you talked about, the AI bubble. I mean, this is quite relatively short-term holding, but I made like 8% in about 4 weeks, and I just thought this is just ridiculous, you
Yes.
know.
Yeah.
So I've sold and gone to cash.
Yeah, it's sensible. But it could go on for a long time, couldn't it? So So semiconductor stocks are currently nearly twice the deviation from the 200-day moving average than in the average bubble,
Yeah.
which is extraordinary.
Yeah.
Yeah, the market has been singularly unfussed by the Iran war, and I suppose it will remain so until
Yes.
oil, if and until oil prices and oil, there's a genuine oil shortage,
Yeah.
and earnings per share estimates halved by a quarter. So look at that, 2026 earnings per share estimates through the roof, basically.
Yeah. Now, this is Anthropic and the other startups being revalued by the tech companies.
Okay, and then it's flowing through to earnings.
Yeah. Thank you to Ali Broider, Discord member for that.
Do you remember many years ago the magic circle of investment trusts that invested in each other? And as they invested in each other, so their values went up, their net
Yeah.
asset values went up, and they were issuing, I think they were issuing preference shares. People were buying the preference shares, and the whole thing blew up, and people with the preference shares were written off.
Yeah. Well, 34% of hyperscalers' Q1 earnings came from lifting their valuation of their investment holdings, which is mainly Anthropic, I'm told.
Good stuff.
So,
What could
it's
go
like,
wrong, Keith? And strong operating cash flows from some of these companies are being invested into capex. So Meta, apparently,
mhm,
Meta is. I was reading an article, quite a scathing article about Meta and its investment strategy, and put vast quantities of money into the metaverse, which is
yes, I
basically
know.
written off. It's no longer doing the metaverse, and now it's putting vast quantities of money into AI. And apparently, its AI doesn't really work very well, and it's spying on its staff with keystroke loggers. And apparently, its staff are starting to get pretty antsy about this for obvious reasons. And one of the reasons it's spying on its staff with keystroke loggers is so that they can be replaced by AI.
Really?
It's
Bloody
like,
hell.
okay, this is a company
Yeah.
I don't rate.
Yeah.
Is this a company that is actually going to hit the buffers and
Mm.
implode? And they do. If you look at the history of these companies, they have a 30, 40, 50-year lifespan, and then they disappear into the dust of history.
Well, we're not going to have time this week, but there's a really interesting report in the FT that I'd like to talk about and probably next time. Um, Looking at the effect of social media on mental health and fertility rates.
Right.
And, it's social media has been incredibly bad for society.
Yeah.
But we can't put the genie back in the bottle, I'm afraid.
You heard it here first, guys. Give us a like.
Yeah.
So dividend buyback yields are at the lows of the last dot-com bubble. So I mean, it's all.
Yeah. It's an expensive market.
And hyperscale expected to have record earnings but falling free cash flow because they're putting it all into capex. But
Yeah.
they're not depreciating it.
Well, that is all going to feed through to profits for Nvidia.
Yes. And one day the music will stop. Cloud revenue. What's a cloud revenue?
Cloud computing revenue. So, for data centers.
Yeah. Well, the problem is that everybody thinks that AI is free, and AI is actually pretty expensive.
Yeah.
And why this revenue is going up is partly because it's being used more, and partly because they're charging more.
Well, exactly. Who is paying?
Yeah.
When you use ChatGPT, do you pay?
God, no.
No. No, exactly. When you type in to your Google search and it defaults to the AI answer, are you
Yeah.
paying? No, you're not.
Which
So,
often I wish it didn't default to the AI answer because the AI answer is often interpretative of too
yeah,
interpretive what you're trying to ask it. And actually, when you rephrase the question, you get the same answer. Ugh. So I don't really
yeah.
like Google's AI very much.
Well, it's as Richard has said many times, it's underpriced.
memory price surge. I remember when I was a young auditor doing an audit of they made gaming machines, the sort of pull the
Yeah.
lever things, and memory chip prices were surging. So they bought about 100,000. This is in those days, like many
Yeah.
years. They bought about £100,000 worth of memory chips and had them all stacked up ready to go. And before they had a chance to lose them, the price of memory chips had dropped back down, and the ones they had were obsolete.
Oh,
Just saying.
just saying.
What's this, Keith?
So this is the operating income of memory chip makers, Samsung, Hynix, and Micron, you know. So as per the Kalecki-Levy model, um, company profits are a function of investment.
Yeah.
So all this investment is inflating earnings,
Yeah.
and those inflated earnings will come back down when this investment phase
Yeah.
fades.
And the other side of it, it's not being depreciated, as we said.
Yeah,
Okay, so IT investments approaching 5% of GDP, and it's probably not sustainable.
yeah. Well, the thing is, at some stage, it has to earn an economic income.
But did you read that these data centers, they're because they can't get the power supply, the plan is that they install gas turbine engines
Mm,
and they generate their own electricity through gas turbines. But which is like a Concorde engine or something.
yeah,
There's something like a 5-year waiting list from order
yes,
to receipt of your gas turbine.
yeah.
So you build a data center, you put all these brand new GPUs and memory we just talked about, and you wait 5 years before you can operate it. And then what?
Is that really happening?
I believe so. I mean,
Because you'd hope that you get your supplies fixed before you start breaking down, etc.
I
Breaking
think we
down.
have to wait and see, Keith, but I wouldn't mind betting in the slightest that this is what's happening.
Yeah,
So Brett appears to have peaked, which means that it's only a few companies that are making most of the gains,
yeah.
which means it's very concentrated.
That's generally a bad sign.
Yeah.
A healthy market has good breadth.
And since the start of the Iran war, really, it's the tech sector that's done well. Communications has done okay, but I guess that's tech as well. And
Mm.
the rest of them are fairly
Yeah.
dribbling along. Can I just say, with respect to this market bubble, you heard it here first, and you probably heard it here first about 4 years
Relentlessly.
ago.
Yeah, exactly. I know. I know that all too well, mate.
Don't base your investment strategy on what we say.
Yeah. Well, I mean, this is it. Where are we?
Yeah, yeah,
I think we're massively in inflated expectations, but we've been here for a long time.
yeah. We have. So the equity risk premium is now 0.88%, which isn't very much, is it?
It's minus
Actually,
0.8%.
minus 0.8%. Yeah, it's just not very much at all.
Yeah.
And that's extraordinary because it's so highly valued as well. Maybe as a consequence of being so highly valued.
Well, it's a consequence of being so highly valued and
Yeah.
higher bond yields. So people are paying up. So normally, well, historically, since the 2000s, you get a discount, a yield discount for
Mm.
equities because they're riskier. You get a higher yield on bonds, is what I'm trying to say.
So momentum continues to beat quality.
And these are big numbers.
Yeah.
In the last 2 years, momentum has outperformed quality by about 35%.
And investors have been piling into leverage. The margin debt has gone up
Yeah.
a lot, hasn't it, from 2023? And we've got forecasts of a 1 percentage point increase in S&P 500 profit margins over the rest of the year, which is very good.
It's enormous, huge. Now, I wonder again how much of this is revaluing Anthropic.
Well, we won't know until what is it? Warren Buffett. Nobody knows who's swimming naked till the tide goes out. We won't know till the tide goes out, and then we'll find out.
Yeah.
But we might find that it's
Yeah.
Jensen Huang. Global liquidity is rising, which must mean that debt is going up.
Yes. Yeah.
Global
Yeah.
money supply has risen by 17 trillion in the past 2 years. So where is all this debt coming from?
Well, yeah, it's the US running, everyone is running huge fiscal deficits, including the UK.
Yeah,
Um, and when you issue debt, you get money which goes into the system.
yeah, that's extraordinary, isn't it?
Yeah. Shocking. Now, we've talked about this before, but the Hindenburg Omen is back. And there should be some good news at some point in this week's episode. But the Hindenburg Omen, you'll be unsurprised to know, is a bad news signal, and it says that the stock market is due for an imminent crash. In essence, what it looks for is periods of strong divergence between the number of stocks hitting a 52-week high and the number hitting a 52-week low. If you get both at the same time, then the market is contradictory and is about to collapse, is the idea. So there are four criteria for the Hindenburg Omen. I won't go through them, pause and have a read, but essentially that's what you're looking for. And history suggests that when you get, a number of Hindenburg omens triggering in a short period, that is an indicator that the market may be topping. Although I noticed that there was this one here, so back in 2017, when you get a lot of them in a short period, but the market kept on rising. So it's not perfect, but one's just been triggered. You heard it here first. The market is incredibly expensive on many measures. We've been warning about that for far too long. Anyway, on to commodities and energy commodities. So, Brent actually pretty stable over the past couple of weeks as markets have essentially got used to what's going on in the Gulf, which remains closed, and markets are being supplied from inventory, which can't last forever. However, natural gas prices are rising again. That is not good. Coal and uranium also pretty stable. So this is Brent, flat over the past 2 weeks, although volatile, flying up and down based on what the latest tweet is from Donald Trump. Spot prices are pretty stable and close to futures prices, 1 month futures prices. But essentially, when you look at the distribution of oil prices since 27, you get this bimodal distribution, and prices rapidly transition between the two is what you want to take away from this chart. So if we start getting into um, the market not being fully supplied because we can't draw down inventories anymore, then you're going to get a rapid shift to much higher prices to cause demand destruction. That's the fear. This WTI also pretty flat over the past 2 weeks. Numbers specific to the oil market. Now, I've had global oil inventory numbers from the EIA for April. And that shows they drew down by 106 million barrels over the course of April. Now, that's only about 3 million barrels a day. So, not enormous. But once again, they have revised down the entire series, including the number for December, which is like 5 months ago now. So, we put previously, everyone was talking about an oil glut, but the EIA keeps on revising down its uh, the entire inventory series. So it looks increasingly like market was overestimating how much oil was in the market. I still find these quite low numbers because we
Yeah,
know. that there's like we think about 6 million barrels off market.
But question, Keith, this is a 2. Let's just round the round numbers. There's 2.8 billion barrels of inventory, but we know that the global inventory is about 6.5 to 7 billion.
Hmm.
So the rest of it is somewhere else. So, and that probably is dropping at around about 7 to 10 million barrels a day. So this is just a sort of a slice of the pie chart. And
Yeah,
where's the rest of the pie chart?
true. That is very true.
And in fact, is the EIA a reliable source of information anymore, or has it been got at by politicians over too long a
Yeah.
period of time?
Actually, you make a really good point that I hadn't clocked previously because obviously, JP Morgan is saying there is 8.4 billion barrels of inventories at the start of the year, but EIA only have global inventories at 2.8 billion. So there's clearly must be missing a lot. I suspect that's oil in transit, etc., and in pipelines.
Yes. Yeah.
Um, so looking at the EIA's US inventories over the past 2 weeks, we've had a fall of 25 million barrels. Now, but we've had SPR releases, so private sector inventories have only fallen by 11 billion barrels, so 11 million barrels. So that means 5 million a week, so less than a million a day. But they are falling even in the US. Now, what's interesting is we have had actually a little tick up in US crude production by 125,000 barrels a day over the past 2 weeks, still down on the year, and the Baker Hughes rig count is ticking up. Reminder, when you drill a shale well, it takes about 10 to 11 months before the oil comes online. So rigs now mean new oil next year. Charts relating to oil market, well, December Brent keeps on rising, as does the gasoline price. And when we talked about the oil glut, Cornerstone Analytics are saying that the IEA in particular had overestimated how much oversupply there was because they had systematically underestimated the growth in demand. So Cornerstone Analytics think that demand has kept on just rising and will keep on rising, whereas the IEA thinks it's tailing off. And that is why there was the everyone had this glut argument. Now, the chart I wanted to draw your attention to is the bottom right, Venezuela. And Trump has achieved his aims in Venezuela. So Venezuelan oil exports have risen quite rapidly. Now, we don't know how much of that is due to just selling oil from inventory, because everything I'd read was that you were going to get short-term gains of a few 100,000 barrels a day in production, but anything bigger was going to take quite a lot of investment to repair infrastructure.
Yeah. So we've had the short-term gain, perhaps.
Perhaps, but
Got it.
still, it's been good, better than
Yeah.
expected. Now, the bad news is EU natural gas futures are rising again. We've had good inflation numbers because the gas prices collapsed over the past couple of past year, but rising again on disruption from the Middle East. Same in the UK, not good. US natural gas futures, having collapsed, are rising again. And I was astonished by this. Thank you to SimonW for sending us this chart. But basically, despite the fall in Qatari LNG exports, global LNG trade has actually grown quite a lot this year. You've got expansions in the US, Australia, Russia, and elsewhere. And so, although Qatar has gone offline, amazing. And LNG trade is going to keep on rising in the coming years. This is coal, pretty stable. Uranium, ooh, coming off a bit. But frankly, everyone's going to be piling into it, nuclear power in the next few years to get away from coal, well, to get away from energy disruption. So I wouldn't be concerned. Industrial metals, Richard.
Thanks, Keith. So quite a strong week for several of these, actually. Aluminium up 3.2%. Cobalt unchanged, copper 3.5% increase, iron ore nearly 3%, lithium carbonate 5.4%, neodymium down nearly 8%, nickel down 3%, tin up 8%, and zinc up 4%. So generally, pretty strong rising trends in industrial metals, especially if you look at the year-to-date numbers.
Yeah, I mean, the thing is, within that, we've had quite a lot of volatility.
Yeah, there's aluminium.
Yeah, so aluminium is a function of electricity prices, which are going through the roof. And B, the Gulf is a huge producer.
Yeah, that's cobalt, copper, and a
Yeah,
big
when I was
spike
talking
up.
about, yeah, look at that. So we know that copper, A, you use a lot of electricity in electro winning, and B, you need sulfuric acid.
Yeah.
Sulfuric acid obviously has been disrupted.
So China has stopped exporting sulfuric acid as well, hasn't it?
Yeah, so that's the thing. When we look at the prices of these things, whether miners are going to be able to take advantage of them very much depends on their individual circumstances.
Yeah.
Some will be producing their own sulfuric acid, others will need to buy it from the Middle East and will basically not be able to take advantage of these prices, so they won't be able to produce.
Yeah. There's iron ore, lithium, neodymium, nickel, tin, zinc, and precious metals. So gold last week was down 2.5%, silver pretty much unchanged, platinum down 3%, rhodium down 3%, palladium down 11%. So big
Yeah.
changes there.
So I have bought metal royalty companies, and they're
Right.
down.
Yeah.
But my ability to time this is like zero, and I I just think I'm going to hold these for a long time. I
Yeah.
just think, on your point about monetary debasement. I mean, I I think in medium term, gold keeps on rising.
Yeah, I think it's impossible to get the timings on these things right, Keith, because there's so many factors affecting the sort of
Yeah,
market fluctuations. But I think you're right over the long term. And the thing about a gold royalty company is it gets its percentage of the gold production, no matter what the cost is to the producing company.
that was the idea, mate.
So it has a completely flat cost base, no matter what.
Yes. Yeah, exactly.
Which is why they're such good long term investments if the price of the commodity increases, which it's going
Yeah.
to. I think also the other thing, this just generally what we talked about our discussion with copper is that the effects of um, the Straits of Hormuz issue are complex and hard to predict. And if you can sort of you can draw one can draw simplistic assumptions that aren't actually true because of underlying complexities one may not be aware of, like your point about sulfuric acid, and will some copper miners actually be able to take advantage of the increase in copper price. So actually, I think it's a bit of a minefield to try and work out what is a good investment, what's not so good investment in this
Mm,
context.
mm.
So foreign holders of gold in US vaults. Well, for some reason, foreign holders of gold in US vaults don't trust the US to repatriate their gold when they ask for it. So they're taking it while they can.
Yeah, I
They want
thought
to
this
have
was a
it in
pretty
their own
amazing.
vaults.
Yeah, this is a pretty amazing chart, though.
Yeah. The
Yeah, if you
problem. Problem with it
Mm,
is actually, I think that the US has probably leased out all of its gold from Fort Knox, to
mm,
get a 2 or 3% return on it over many years, and with all the foreign gold disappearing, how much. The question is, how much gold does it actually have?
yeah, yeah. I mean, this, if you want a chart that shows the reduction, the fall in trust of the
Yeah.
US as a financial center, this is it.
Chinese monthly change in gold reserves. A lot of so I've used this term 3 times, I think, now today. Smoke and mirrors in China's gold buying. I think they release information based upon what they want to release as
Right.
opposed to what's really happening. But they would appear to be buying more gold again. Tether has doubled its gold holdings in 12 months. And all investment banks remain bullish on the price of gold.
Yeah, you should treat this obviously with all the skepticism and contempt it deserves, but you know, everyone remains bullish. Well,
I think the
Bank of
interesting thing,
America
sorry,
forecasting silver was going to go to 300. It's really struck me though.
that's the price of silver. And the silver market remains in deficit. It's been in deficit for 5 years now.
Yeah, and silver, a lot of silver is produced as a byproduct of copper mining.
Yeah,
And the fall in sulfuric acid provision will have a knock-on effect.
yeah. And is there panic buying of silver in China? Has there been?
Yeah, look at that. Jesus.
Hmm. There's platinum, rhodium, palladium.
Okay, thank you, Richard. And on to interest rates. And it's been shocking, honestly. The whole yield curve has shifted up, not just in the UK. So the UK is suffering from some idiosyncratic risk because we're a political basket case, but the yield curve has shifted up everywhere. Now just look at the short end. The short end. So Bank of England interest rates are 3.75%. The 2 year is at 4.5. So essentially, the market has taken away control of short-term rates from the Bank of England. If and most mortgages in the UK are 2 year or 5 year fixed. So we have had significant monetary tightening for mortgages in the UK. And that is super bad for house builders and any sort of medium-term investments, such as buying a house. So until this gets fixed, you really want to avoid house builders, etc. You're going to see a
Yeah.
big drop in demand. This is the US, and Kevin Walsh comes in. Everything I'm reading is that he's still talking about easing this year, etc. Um, and doesn't will not be well be, will be attempting to avoid raising interest rates. Well, the market is pricing in higher interest rates.
Mm.
Now, when we talk about bond yields in the UK and US, etc., being 5.5%. In the UK, they're 5.8%. The Bank of England has an inflation target of 2%. Historically, it's managed around 2.4%, and inflation expectations have been pretty well anchored. So you're now talking about real yields of over 3%. Now, I just don't see how an economy that is growing at 1%, so we're talking nominal GDP growth, sustainable nominal GDP growth, about 3.5%. So your real interest rates of over 2%. I just don't think that's sustainable. Now, um, at some stage, when this inflation surge has passed, bond yields are going to have to come down, or the economy just doesn't work as far as I can see. So these are inflation break-evens, and they have shot up. So they were stable, and now in Germany, you've had a 40 basis point increase in inflation expectations over the next decade. That's enormous. UK 10-year forwards are now well over 6%. So the market is expecting that in 10 years' time, the UK 10-year will be over 6%. That's astonishing. That it can only be assuming there's going to be either heightened risks of a UK default or that inflation surges. Now, QT continues in the UK. The Bank of England is still selling bonds, and that has been in part responsible for why UK yields have risen more than in other countries. It also is very bad for liquidity in UK gilts. But foreigners continue to buy US Treasuries, despite what you may have heard elsewhere. So some charts. This is the UK 2-year. I mean, look at that. Got a 1% increase in the 2-year yield over the past, well, since the start of the war. And I don't think there's any chance that Bank of England's going to be raising 3 times. So essentially, the market has tightened, and the Bank of England has lost control of the yield curve. This is the 5-year. This is the 10-year. Again, shot up to new highs over the past 2 weeks. 30-year, the same. And frankly, when you look at this chart, that doesn't look like it's peaked. The US 10-year, I mean, frankly, my concern is we have talked earlier about the outlook for the war in the Middle East and oil prices. My big concern is the logic of the war in the Middle East is that Iran will try and keep this straits closed until oil prices go parabolic. At that point, bond yields could just become totally unanchored. So US 10-year, again, hitting new highs, bad. This is the differential between the UK and the US, and it has increased, but they're both rising in an unpleasant fashion. Germany, some of these European charts are interesting. So look how Germany has risen sharply. France, not really. Italy, not really. Greece, not at all. So actually, the last few weeks, the market is saying that countries running a big deficit, as Germany is assumed to be doing in the future, that they're punishing those countries like the UK. Look at Japan. This is an astonishing rise. Now, medium term, and I've got this entirely wrong, as you all know, because I've thought that the country can't live with these high bond yields. But there are still good reasons why bond yield should come down. So we've talked about this previously. The Labour share of the GDP has been falling, and that has a very good correlation with R star, the neutral interest rate. So R star should be falling. If inflation remains well anchored at 2%, then the R star, the natural rate, should also be coming down towards 2%. Labour force growth in the US is slowing, and there is a good correlation between real forward rates and labour force growth. In the US, essentially, the birth rate's been falling, leading to lower natural growth in the labour force, and Trump has cut down on immigration. So you're going to get a total collapse in the labour force. If we look at this chart, then real interest rates should come down. And in economic theory, there's essentially a mechanical relationship between labour force growth and R star. Lower labour force growth means lower R star, of because you need less investment. But of course, at the moment, everything's distorted by this extraordinary rise in AI investment. So once the AI investment surge falls and inflation expectations get back to normal, a country like the UK, which has got a low growth because it's got low um, population growth um, of around 1% per annum and stable inflation, should have lower bond yields, and bond yields should come down. And so locking in, 3% per annum real should be is becomes a very good investment. However, you're assuming that inflation comes back down, and you're assuming that the fiscal status quo is sustainable. Now, Richard's point that you know the US can't keep on running a fiscal deficit at 6% per annum ad infinitum is absolutely true. And the US has got itself into a terrible bind now because corporate profits are only sustainable if the fiscal deficit continues to run at these levels. But they can't run at these levels. So something has to give. Richard, your thoughts?
Yes, I mean you summarised my views very clearly there, Keith.
Yeah,
So the logic of your explanation is great, but as you say, there are these confounders, and
yeah,
it's the confounders are uh, have a far bigger, in my mind, have a much bigger effect on what's going to happen than the theory allows for. So yeah, just to repeat, I do see government debt burdens as unsustainable, and I do see that the sort of taking a little step back. If you look at if you say what is the price of energy, let's say 3 months ago, in comparison to the price of other goods and services in an economy, the price of energy has fallen consistently for many years.
yeah.
So the relative cost of input of energy has fallen. Now, was that a golden era um, of, uh, of abundance, and or was it sustainable? And what this is showing is it was a golden era of abundance, and it's not sustainable. It may revert in the longer term, but right now it's not sustainable. And that the consequence of that is that the relative cost of the energy input into the economy goes up significantly, and I think that's going to happen, which means that inflation isn't going to be the figures it has been. In effect, we're going to be introducing quite a significant amount of inflation via energy for a quite significant period. There's then going to be a move towards nuclear, more of a move towards solar and wind, although solar and wind are pretty inefficient methods of generating electricity in terms of the energy return on investment, and a reorganization of the fossil fuel market.
Mm.
So my view is we're going to have significant inflation for a significant period of time until this all re-stabilizes. And that means that the fiscal deficits and the debt that governments have built up and are relying on to function are unsustainable.
Well, the thing is, Richard, my point would be that media, the Bank of England would, when you talk about QE, Bank of England will do QE when inflation's down. And inflation, in turn, is actually largely a function of wages. You can have higher input prices, but you can only have sustained higher inflation if those higher input prices keep on rising and they're only a small part of the overall economy. So, most of the economy is wages. And so if we get wage growth under control, we get inflation under control, and medium term, when you've got an economy growing at 1% per annum and you're trying to raise growth, you need to get interest rates down. So if we get interest rates, if we get inflation down, then Bank of England cuts rates and the whole yield curve will shift down. Now, medium and in the case of fiscal sustainability, that is within our control. We can cut social spending and we can raise
We can.
taxes.
We can.
But that's a lot of ifs.
It
And,
is. Yeah.
requires some actual, sensible, mature prudence from the British polity. And I see very little sign of any of that.
It
Uh,
won't be forthcoming until there's a crisis. And
yeah,
it'll change when there's a crisis. Basically, the crisis will enable politicians to blame some external factor.
yeah,
And without blaming themselves, obviously, actually, fundamentally, the politicians will be to blame. But we need a crisis. So we will struggle along the path we're on, Keith, in my view, until there's a crisis and the resolution of the crisis.
yeah. So that's kind of where I'm going, Richard. If the war in Iran continues and but oil prices continue going higher, then bond yields will keep on rising with them, full stop.
Yeah,
But at some stage, I think bonds become a really good investment for UK investors who have to pay CGT because the capital gain on bonds is tax free.
yeah,
So I will continue watching this. Obviously, fiscal sustainability is a big thing in that, if the UK defaults, then all bets are off, etc. So the risks of that would totally undermine the argument.
yeah,
But, I don't think the UK will default. And so at some stage, bond yields peak. And when they peak,
yeah.
they're really worth looking at. But we're not there yet.
No, I agree with that, Keith.
So on to this week's economic data. Now we're going to rush through this because, frankly, I think it's all fairly irrelevant, and what matters is the outcome of the war in Iran. But quick summary. UK stagflation. Inflation is rising, definitely, but the UK economy seems to be resilient for now. EU stagflation slash stagnation. The EU economy does seem to be slowing. US stagflation. The US economy is okay, but inflation is rising. Stagflation is not good for anyone. It's best for commodities. It's worst for bonds. On to the UK, Richard.
So UK CPI better than expected and at 0.7% month on month in April and 2.8% year on year.
Yeah, actually, the fall in the energy prices over the past year means that, unlike everyone else on the planet, our inflation's actually down over the
Yeah,
past
I mean
month.
it's a bit of an artifact, isn't it? And it's going
It
to
is.
obviously go back in the opposite direction with the rise in energy prices that is
Yeah,
unavoidable.
yeah,
And there's core at 0.7% month on month, 2.5 year on year.
yeah. Core of 0.7%, which excludes energy prices, is not good. I'm amazed this is down, actually.
Yeah,
So I thought the RPI coming in like half expectations was amazing, and actually implies that there really are no secondary effects as yet. That's it was half expectations month on month,
yeah.
April.
Input PPI 2.4% in April, year on year 7.7%.
Yeah, this is really not good.
That's not good. And look at the graph. And that
Yeah.
sudden spike up. That is really unhealthy.
Well, if oil
That's
prices keep on rising, and go parabolic,
it's
this
shocking,
could
really,
be,
isn't it? Yeah,
yeah, this could be bad.
yeah. Output PPI hasn't yet caught up with input PPI, but it's on an upward trend.
Yeah. And, what you're seeing there is a squeeze in margins.
Average weekly earnings 4.1% in March.
Yeah. Including bonus ticked up, but
Including bonus 3.4% falling. But I think
yeah.
that's going to reverse because we are going to see an inflationary surge, there's no doubt about it.
Well, that depends on Labour pricing power, Richard, and that much depends on Andy Burnham coming back in and giving the unions what they want, because the labour market is weakening. So, left to its own devices, wage growth should go negative, real.
Well,
But,
we shall
you
see.
know,
Yeah, yeah. UK public sector pay outstripping private sector pay, but the gap is narrowing, returning to the mean, really, probably.
yeah,
And wage growth is currently moderating in both sectors. I think it's going to go up. Keith thinks it depends what happens. So we're both right. Keith is
yeah,
absolutely right. It depends on what happens. I'm staking that it's going to go up. So we shall see.
yeah. No, I think if Andy Burnham comes in and he gives, public sector pay rises, then,
Yeah.
that makes a huge difference. But in the private sector, this is what should be happening. Construction sector is struggling, so
Yeah. Well,
real
wages are going down.
nominal wage growth in the construction sector is negative.
Yeah. 3 month employment change is looking healthy enough.
Once again, and we've had this for ever.
Yeah. And the
This is just,
unemployment, yeah,
the totally contradictory
yeah,
numbers. HMSO payrolls, showing the exact opposite.
yeah. So which do you believe? Answer, who knows?
Yeah. Well, it's not just the claimant count is rising and the unemployment rate is rising.
Yeah.
So it doesn't suggest a UK jobs market that is growing. And if these jobs aren't turning up on the HMRC payrolls, where are they? Question mark.
Yes. GDP growth quarter on quarter of 0.6% and equates to 1.1% annual growth.
Yeah. It's really resilient, surprising.
And currently, GDP growth for the UK is at the top of the G7 countries. But we've only been at the top 1 month or 1 quarter. And if you look back at past data, we're nowhere near the top. So,
Richard, you cynic. This was our one good chart the
yeah.
whole week, and you've just scuppered it. For God's sake.
Sorry, Keith. My cynicism overrules everything. So this just shows the winners and losers. So I would just have a look at that if you're interested in seeing who's done particularly well and who hasn't, or which sectors.
But I mean, I was impressed. The broad-based economic growth in Q1,
Yeah.
despite the first month of the war and Labour, sticking up regulations and taxes on anything in sight.
So business investment 0.7 in quarter 1, but year on year minus 1.8%. So generally speaking, our business investment is too low. And what we need is a tax environment and a regulatory environment that facilitates business investment. So Andy Burnham, go and bury yourself.
Yeah.
Industrial production month on month down 0.2%, year on year unchanged. I revert back to my previous comment on business investment. BRC retail sales year on year down 3.4%. That's not good.
Yeah. Sharp drop in April. So are we seeing the first signs of the impact of higher energy prices, etc., and uncertainty on consumer spending in the UK?
Yeah. Construction output down 0.3% in March. And construction PMIs 39.7 in April, so a big drop. And the construction sector clearly is weakening quite significantly.
As you'd expect. I mean, a lot of when you think about construction, It's very energy intensive, i.e., bricks, cement.
Yeah.
They are basic function of natural gas prices. And demand is a function of interest rates, which you've got, so everything's going in the wrong direction.
Yeah.
Builders are being squeezed from both sides.
Yeah. Consumer credit stable. Net mortgage lending inching up slightly.
Yeah, I was amazed by this because that goes against everything I've just said. I was expecting
Yeah.
this to be coming down.
Yeah. Net lending to individuals actually is on a bit of an uptrend at the moment.
Mm,
Whether that's a good sign, whether it's people resorting to credit cards in order to make ends meet, however, is a moot point. House prices down very slightly month on month and very slightly up year on year. So basically, house prices on a little bit of a downward trend, and the house balance is minus 34. So
yeah. So more estate agents reporting falling prices than rising.
UK trade balance almost as bad as it has ever been. So one of the things, Ed Miliband doesn't want to reopen UK domestic fossil fuel production because he says it won't make any difference to the global oil price. Well, I mean, he's right. but,
Yeah.
but he's right in entirely the wrong place in that we should be produce our own fossil fuels, even if we don't want to
Yeah.
be burning them too much, because of the impact on our trade balance. It's just nonsense.
Yeah.
The drivel these people come up with is extraordinary.
Exactly. We would create jobs in this country and improve our trade balance, as you say.
Absolutely. I just don't. I do not understand. I do not understand the foolishness of our politicians generically.
Mm. Well, the other thing it would do is improve our energy security.
Yeah, completely. I mean, it's a no-brainer. It's like, yeah, I just need him. Okay, so the Indeed jobs posting index is. I mean, if you look at this, right, the UK jobs market for the last 4 years has been relatively healthy. The Indeed job postings index looks like it's been a complete disaster area. I rest my case, Gov.
Yeah, that's true.
UK wage growth at around about 4%. So as the note on the side, it's not compatible with the 2%. But I think we sort of have to give up 2% inflation target for the time being, don't we? Because we know it's going to go a lot higher with energy costs.
Mm.
So the UK has a long-standing underinvestment problem. The most trustworthy and highest investment per GDP are actually the Northern European countries, Finland, Norway, Denmark, Sweden, which is really interesting.
Yeah.
We are reasonably well trusted, but our investment is very low.
Yeah, exactly. We just invest a lot, much lower than actually countries with, poorer trust than us. So,
Yeah,
amazing. Germany's got lower trust,
yeah,
but much higher investment.
yeah.
We invest less than Portugal or Turkey. Shocking. I wonder however, is that just a function of it being a services economy? Question mark. When we talk about energy, so this is the Forties pipeline system that transports 550,000 barrels a day from 85 different North Sea oil fields to refineries in Scotland. But obviously, the government has announced that it will not be allowing any further exploratory drilling in the North Sea. So the pipeline system is declining asset, and its owner, Ineos, has declared it uninvestable and has ceased maintenance work. Pipeline is due to close in 2035, but without maintenance, it could close earlier. Something's got to give.
Do you think we should buy a sort of some type of? Maybe we should just buy a bit of land somewhere, declare UDI, Keith.
I think we should. There's that bloke in Australia who did it, didn't he?
Did he?
So he declared his own private kingdom around his farm for 25 years.
25 years. Amazing.
Yeah.
You've got to do something because it is so dire, it's so dreadful. As a Green Party is I mean, I'm not going to say anything because it might be libelous, slanderous, but
Well, the point of this chart, Richard, is that higher electricity prices have an effect. Because the UK has the highest, very high electricity prices, we've lost all our heavy industry. So electricity consumption has fallen more than any other large country. And the only countries which have seen electricity falls of a similar magnitude tend to be war torn. And when we talk about, the Labour Party sticking up costs, we have a national minimum wage, but regional pay variations. So the national minimum wage, which should be roughly two-thirds of median, is only half of the median wage in Reading, i.e., you can hire people in Reading on the minimum wage and that they're quite cheap labor. But in Doncaster, the minimum wage is 82% of the median. So hence it's difficult to hire people in Doncaster. They're expensive. Now you could try and fix this by saying there should be regional variations in the minimum wage.
and there'd be a benefit to that, Keith, because it would take a regulator, and we need that would help ease our unemployment problem. So it's a very good idea.
Oh, yes. And regulators are so effective, as we know from the water system.
And it would increase our GDP because the GDP of a regulator, contribution of a regulator is significant.
Well, how do you measure the output, GDP output of a regulator, Richard?
Well, you take the total cost of running the regulatory department, multiply it by 12.
My God, I think you just talked yourself into a job.
I could be the regulator's regulator.
Exactly.
Is the ONS recruiting at the moment? I think.
Well, it should be.
So this is a summary of the UK, which, as we have just discussed, is almost universally good news. And have a read of it. And
and briefly, why heat pumps aren't economic in the UK?
is this true?
You'd be unsurprised to learn, Richard. Okay, so basically, when you look at the economics of heat pumps, if you have a gas boiler, then the cost of heat equals the cost of gas. But if you have a heat pump, then a heat pump produces roughly 3 units of heat for 1 unit of electricity. So the cost of a unit of heat equates to about 1/3 the cost of a unit of electricity. So heat pumps are only economic if the cost of electricity is less than 3 times the cost of gas. Is that clear?
So this is easily fixed, Keith. This problem is easily fixed.
Oh.
And we probably only need a small regulator to fix this. You just increase the price of gas.
Very good point. Well, I think that is the British solution, surely.
You have to ignore the fact that a lot of our electricity is generated by gas. So you have to increase the cost of some gas, not all gas.
So, in essence, it doesn't work in the UK because the UK electricity price is 4 times the gas price. It works in Sweden, where heat pumps are economic because the electricity price is only 1.3 times the gas price. So you can, push heat pumps as much as you like, but they're not going to work unless you get the electricity price down relative to gas prices. And onto the EU. So industrial production actually up in March, but down 2.1% year on year. High electricity prices in Europe, not good. Retail sales down for 2 months in a row, month on month, but up 1.2% year on year, not great. Producer price inflation, unsurprisingly, rising rapidly in March. That's only going to get worse in April. Construction PMI going through the floor as bond yields rise, i.e. mortgage rates rise, and builders are squeezed by rising energy costs. I was so shocked by this, actually. The economic index, so this is a survey of economists, actually improved in May. It was expected to deteriorate, well, stay very negative. It actually bounced a bit. Job postings index is still on a downward trend. Wage growth falling. That was in Germany. France, jobs market continuing to deteriorate. Wage growth very low. Inflation forecasts continue rising. So summary, stagnation. It would seem to me that the EU economy is slowing. Let's wait to see how the war develops. US, Richard.
So US CPI is 0.6 in April, 3.8% year on year. Month on month, core CPI 0.4 and April 2.8% year on year.
Yeah, so
both turning up slightly.
yeah.
Energy prices big contributor to the rise in April CPI. And good God, salad vegetable prices are steadily, well, not are zooming up. Tomato prices are in 300% annualized rate over the last 3 months. Extraordinary.
Yeah. Now, the thing is, if this is in Europe, I'd say this is entirely understandable because, we grow a lot of vegetables, salad vegetables in greenhouses, which are heated with natural gas. Perhaps perhaps that's the same in the US.
This wouldn't happen in Europe, Keith, because the regulators would say it couldn't.
Yeah, exactly. You can't sell them at that price.
Yeah, it would be banned. You'd have to dump them.
Yeah.
Turn them into tomato puree or something. So the rising core CPI in April is a combination of rising services and owner's equivalent rent. Who knows if it's sustained? Probably there is some sustainable increase in rent in US inflation because of the energy price effect.
The rise in CPI was mainly, look at this chart, a function of the housing sub-index. Okay. And that is a technical thing. So essentially, the way the Bureau of Statistics calculates the rent index is by a survey. And last October, i.e., 6 months ago, the government was in lockdown, so they weren't doing the survey. So what they did was they assumed that all the people they would have surveyed had rental inflation of 0%. Comes to April, they then redo the survey, they get the true number, they stick the number in. So all those people they would have surveyed have had a whole year's worth of rental inflation in 1 month. So we're still, basically, the bottom line is we're still being distorted by the US government shutdown.
So US PPI month on month, 1.4%. In April, 6.6% year on year, which again is very, very worrying. And core PPI 1% for the month and 5% for the year. So that indicates that there is inflation coming down the tracks.
It does. This is not good.
And higher energy costs equals higher freight costs, and higher freight costs go into higher consumer prices. The rise in April PPI was pretty much down to energy, no broad-based inflation as yet, but that will come through. US labour productivity was up 0.8% quarter on
Yeah.
quarter, which is good.
I mean, the US is fantastic, isn't it? I mean, they generally create wealth there in a way that, UK productivity has been unchanged in the last 10 years.
Yeah, completely. Yeah. And then US unit labour costs quarter on quarter, 2.3%, which is significantly high. Non-farm payrolls up 115 in April.
Yeah, resilient.
And there's the breakdown of the change in non-farm payroll if you're interested.
Well, construction, which I'm interested in, continues to add jobs.
Mm-hmm. Household survey suggested a fall in employment of 226,000, so contradictory data there. Month on month hourly earnings 0.2% in April, 3.6% year on year.
Yeah, and so that is compatible with the 2% target given US productivity.
Yeah. And average weekly hours 34.3, so no change really. Unemployment rate pretty flat, 4.3%. U6 unemployment rate 8.2% on a long-term slow increase. ADP employment change is 109,000.
Yeah, so all good, actually.
Yeah. Challenger job cuts 83, but nothing exceptional. Jobs openings 6.8 million, but that's on a gently declining trend. And hires, quits, and layoffs all look pretty stable. And IT is adding the main
Yeah.
sector that's adding jobs.
Now, you would say, you'd think that IT was in the, headlights of AI,
Yeah,
but this could be Jevons law in action. Increased productivity because increased demand.
exactly. Yeah, and also I don't think AI programming is all that its promoters suggest that it is.
Mm.
So I know someone who was on a course for some AI coding, and they had a 110 line piece of code that they asked the AI to replicate to see how it worked. And it apparently produced over 10,000 lines of documentation.
Bloody hell.
Which isn't useful.
No.
And was probably very expensive, actually.
Mm. But not for him, for Anthropic or whoever did the
Exactly, yeah. So continue to be more unemployed people in the US than there are job openings.
job openings seem to be just gently declining still.
Yeah.
So the trouble with when you talked about earlier, the unreliability of the Indeed job numbers, I'd say the trouble is the job openings numbers is there are huge lags. You put in an advert for a job, and if it
Yeah.
doesn't get filled, you just keep it there.
Yeah.
So
Yeah. So US construction spending month on month was actually up 0.6%. Data
yeah,
centers, one thinks. US factory orders was also up 1.5%. That would be GPUs.
well, and weapons.
And weapons, yes. Retail sales month on month. That would be firearms.
And doing just great, actually. US
Yeah.
consumer,
Yeah.
fine.
Industrial production, fine. ISM services PMI looking quite healthy.
Yeah.
Services ISM services new orders. It's okay, isn't it? It's a bit bouncy.
Mm.
The logistics managers are very happy. So clearly there's
Yeah.
a lot of stuff being shipped around the country.
Yeah, that's surprising, actually. I was surprised by this.
Well, the economy is doing very nicely still.
Yeah.
Economic optimism, 42.6. So that's all taking a little bit of a hit, probably from the war. Business optimism is it's a bit bleh, to
Mm.
use a technical term. And Michigan consumer sentiment is falling.
Yeah, to new all-time low.
Which makes you wonder about the measurements.
True.
US consumer inflation expectations 3.6%.
Actually, not risen as much as you'd expect.
No, sorry.
I think the US is quite insulated from the wider effects.
Yeah, they're quite insulated generally, aren't they? I think, initial jobless claims 211,000, so it's fairly sort of standard, really.
Yeah, not going anywhere.
Continuing jobless claims 1.7, 1.8 million.
Yeah, not going anywhere.
And Indeed job postings, basically the same shape. I doubt the veracity of
Yeah.
this data. And Indeed wage growth just ticking up a little bit, 2.3%.
But 2.3% is a great number.
Okay, so the weekly GDPs, US Dallas Fed, 2.7%, Atlanta, 4%,
Yeah, for Q2.
New York Fed, 2.6%, St. Louis Fed, 0.8%. The Lantern daily economic index. Goodness me.
Yeah.
Well, this week 49, last week 6.8. I was like, well, how useful is that?
Well, but it's been strengthening. It's been strengthening.
Yeah.
So,
But why have you got this data? Well, because we can.
yeah, exactly. That is true. But,
What
it's
does it
no
actually
sign
show
of
you?
weakness there, mate.
What does it actually show you? Fuck all.
Well, we don't
Sorry.
know, but,
It's like I don't invest on the basis of daily GDP data, I have to say.
that's true. But it's the trend. When you look at the trend,
Yeah.
US economy is strengthening again.
Yeah. So US truflation 2%. It's
Yeah,
climbing though. That data set is climbing.
it is climbing, but not as much as you might expect.
Hmm. So in normal terms, the US economy has been on a tear since the pandemic. Very,
Yeah,
very steep climb.
in nominal terms.
Yeah. And the AI boom is showing up in trade stats. So AI related is doing jolly well. Total excluding AI related is doing not terribly well.
Yeah.
Tech investment tech investment boosted GDP by 1.3% in quarter one, which is chunky and will fall away at some point. And as we've discussed, we're not quite sure what the long-term utility of this investment is at the moment. And here's continuing increase. Well, I mean, hyperscaler capex estimates are extraordinary and probably not going to come to pass.
Well, yeah. At some stage, I think investors pay patience with funding open AI to stick it all in data centers, whatever.
Yeah, I mean, it's at some point it all comes back to cash flow.
Yeah,
we just haven't got there yet.
Yep.
And outside of tech, business investment is actually falling. So Goldman expects US unemployment rate to rise due to a combination of AI disruption from the Iran war. I'm not arguing with Goldman's estimate, but I am not sure that AI is going to be going to bring doom to the employment market that is forecast by people. And the unemployment rate for graduates is falling.
Yes. So there we go. Good news. All the young people watching in the US, actually, the graduate rate has not increased. The unemployment has not increased. It's fallen. That's great.
I mean, we are at risk of repeating oneself. We are in the midst of a serious marketing campaign by the CEOs of AI companies to tell us all that AI is absolutely groundbreaking, world-beating. And they have to do that because without it, they don't get investment. They don't get investment, their companies go bankrupt in about 7 days. So, and somewhere you have to try and dissect out what the truth really is, and that's very difficult to do because there's a lot of vested interests. US consumers cutting back on discretionary spending, very clearly.
Yeah. So restaurant bookings are down.
Yeah.
And Whirlpool have reported very poor appliance demand. So we've talked previously about how the lower half of the income distribution are increasingly squeezed. All the data supports that.
Yeah, it does. Delinquency on credit cards and student loans are high and in an uptrend.
Yeah, and I think credit cards, auto loans, really revealing.
And the interest expense on outstanding debt has been in all of the news that I read anyway over the last month or two, where it's got 40 trillion of debt and the interest payments have exceeded $1 trillion.
Yeah. Now, when we talk about fiscal sustainability, this becomes totally unsustainable.
Yeah, especially in an rising interest rate environment.
So what happens? Because eventually you get to Ponzi financing, where you're having to issue debt to pay the interest on the debt.
So what happens, Keith, is to my mind, is that it continues until it can't continue. There's a crisis and it changes. Because to stop it means cutting huge amounts of expenditure, reining in military expenditure, reining in social security expenditure, and it's completely unpalatable and unacceptable
Yes.
to a politician who wishes to be re-elected. But that's the way they view it, and so therefore it won't happen until it all goes wrong, and then we'll all go wrong, and there'll have to be some sort of a significant change. And
Yeah.
that's the so I'm not predicting the demise of the US dollar as a reserve currency or anything like that. But what I am saying there will be a discontinuity.
Yeah. Yeah. In which case, buy gold.
That's my hot
Yeah.
commodity, and hard assets.
Well, on that point, Richard, I mean, they're not going to cut spending. I think that is true. But you could raise taxes. Now, I sent this really interesting set of charts from Ali Baroid. So this is the federal tax rate by income distribution. So this is, you know,
Yeah,
the low income workers had a marginal rate below, what's that, 18% back in 1950,
yeah,
whereas the top marginal rate was 70%.
yeah.
By 2018, it's the last data on this chart, you know, taxes for low income workers had risen. Taxes for the rich had absolutely collapsed.
That's quite extraordinary, isn't it?
It-
Actually,
yeah, so this is like carry and all that stuff.
it's what we know as the anti-Robin Hood trade, not
Yeah,
trade. Yeah, anti. It's robbing the poor to pay the rich, effectively.
yeah, precisely. So, if they wanted to, the US could absolutely rake in a hell of a lot of tax income by taxing the rich more. Obviously, this has not happened in the UK, where every politician queues up to say that the people with the broadest shoulders, i.e., the middle classes and above, all have to pay more tax.
We don't want to just tax the rich in this country, Keith. We want them to leave the country so they don't
Yes.
have to pay tax in this country.
Yeah, because we don't like them.
We don't like people who are
Who make
successful.
exactly.
So there's the summary. It's a bit mixed, a bit messy.
Yeah, but bottom line is the US economy is doing just fine. And actually, right, quickly, the US true unemployment rate. So we've talked about previously the true interest rate. And this again is from the Austrian School of Economics, and it aims to look at the number of people who are available for work and essentially not just unemployed but underemployed. So it includes the unemployed and people who are work part-time for economic reasons, i.e. they'd prefer a full-time job, and also people who earn less than 20,000 a year. So essentially they would ideally like a higher paying job if they could find one. Now, previously, or you would say that, oh, the true unemployment rate is so high. Yeah. It's much higher than the official unemployment rate. And so, conspiracy theorists would say, oh, the government's manipulating the unemployment rate, etc. But actually, look at the trend. The trend is down. It's
Mm.
much better than the trend in the unemployment rate. So actually, when you look at it compared to itself, the true unemployment rate is close to all-time lows. And so it paints a much more optimistic picture of the US economy, of the US labor market, than does the official statistics. So when you look at the true unemployment rate, US economy is doing just fine. And onto one chart. I thought this is absolutely amazing. This is how good large language models, AI, are at replacing humans. So the length of task that they can replace. So, previously ChatGPT could, replace a job that a human could do in a couple of minutes, but no more. Now they can do something that would take humans like 15 hours to do, apparently. If this is true, this is
Yeah,
going to
so can I
transform
put
the
a couple of,
world.
I don't know, I don't
Well,
know this piece of data, but I would say, what is it that, what are these tasks? Because it's not generically true, is it? There may be some tasks that they can do. What are they? I'd
yeah,
like to know that. And then the second thing is, um, how? Okay, so we could say, well, it can replace a fairly simple like checking up a legal document against statute,
yeah.
which is actually something that AI is very good at because it's a very rules based. So how quickly can these rules based tasks be transferred to non rules based tasks? That's my question. And
Mm.
what is the development time horizon for that movement? And I don't know the answer to that question, and I don't really believe what the AI gurus come out with because, as I say, they have very, very much a vested interest in raising money from VCs. So my question is, yes, they may be able to do this for certain tasks, but if you want to make it that generically they can do these things, well, how far away from that are we?
Mm. So I was talking to somebody last weekend about who worked for an investment bank, saying, how much do you actually use AI?
Yeah.
And they said they had an internal system and it was pretty useless and nobody used it. And that was, but he was saying it will get better over time. But, you know,
What we don't know is how much better and over what period of time.
yeah, that's right.
And
And
we
but
also, are we reaching the limits of LLMs in terms of trainability because there isn't the data to train them on? And like, Meta is training its AI on the keystrokes of its employees, but does that really train the? I don't know. So it does it work? Does it how and there's the concept you train LLMs by creating situations. Other LLMs create situations, and that trains the LLM, and eventually the whole thing dissolves into a
mm,
disaster area of false information that is deemed to be true by the LLM. And that's a sort of statistical certainty if you use LLMs to train LLMs. So it's very difficult. And have we actually, are they actually a blind alley? And are we ultimately going to have to reverse ourselves out of it?
well, I don't think they're a blind alley, Richard. I mean, in the case of, that a few months ago, I did this, showed you this poster I'd made on ChatGPT
Mm.
where it went
Yes.
terribly wrong. It's like
Yes.
had a picture of the two wrestlers in front of the Kremlin. But I eventually did get there. I
Yeah.
mean, hand drawing that, whatever, would have taken, ages. And,
Yeah.
Chat
Yeah.
GPT kicks it out in
You're
two
right.
minutes.
It's not a blind alley in the sense of that they have utility, but is it actually is it the route of future development, or is the actual route of future development something different?
Yeah. Well, they're betting big that it's going to be the future of humanity. So we've massively overrun as ever because there's just so much going on in the world. So I'm only going to do one section this week, which is more technical analysis from Simon W. Richard.
Thank you, Keith. So this is the S&P 500 at the top of its current trend line from July 2024. And what will it do? Will it hit it and retrace, or will it? I don't know. But Simon W seems to think that the year-end target of 7,700 is in place, and he may well be right. Nasdaq has returned to its upper channel.
Yeah.
New leg up for AI. Goodness knows. I mean, the problem I have with this, I'm not saying it's not clever stuff, but my problem is that we are at a point where are we at a point where this extension of part of the past into the future breaks down? And I don't know the answer to that question.
Well, the thing is, but the whole point of this, Richard, is the charts should tell us. The charts, he's got this right over the past few years because the market does its own thing.
Mm. We'll see
and
momentum. It's the momentum ETF trade, isn't it?
yeah, that's right. Now, I think he's saying here that you know, it's entered back into its top of its channel and it's probably overextended itself.
Yeah. So that's the Nasdaq Composite. Um, same comments really. The Philadelphia Semiconductor Index has gone vertical.
Yeah, that looks like a blow off top to me.
Yeah,
Hence I got out of the momentum ETF and will pay my CGT.
probably very wise, Keith.
Well, the future is unknowable.
Yeah. Memory chips, yes. I mean, probably is a blow off top.
I thought this was interesting. So that he's included a few charts of technology stocks he's interested in. And so
Yeah.
the next few charts are all optical component.
I'd like to see this chart. I'd like to see what it was. I don't know how Sienna Corporation, how long it has been in existence, but I'd like to see a monthly chart. See where it's actually come from. Because at the moment, this is 11 or 12 months.
Mm.
So I'd like to see where it was, where it's been much over a much longer period.
Well,
Give some
true,
context to its current rise.
yeah, that's true. But currently the technical analysis is showing it's just climbing like climbing like it's
It
going
does.
through. Yeah,
This is where I find technical analysis difficult, Keith. Is if you go back to August 2025, you look at this
yeah,
chart, you would say, well, let's go back. Yeah, August 2025. So we're at the top of its range. It's probably going to top of the range, going to drop. Well, it did slightly, and then it blew out. Well, the technical analysis would never have told you that. So this is it's all. I mean, maybe Simon was very clever. Maybe he did actually invest in early in mid late 2025, but actually there's nothing to tell you in August 2025 that you should have invested in this company. And that's where I find technical analysis very, very difficult.
well, you see, I disagree with that, because I think what it's saying, if you look at like August 2025,
Yeah,
when it breaks out of its range
yeah,
and goes above its moving averages,
yeah,
you want to get in and then just keep on. And essentially, when you look at like, I don't know what the blue line, which is, I don't know, 50-day moving average, and the purple line's are 200 or something like that. If you buy when the 50 goes above the 200 and then, don't sell it until it reverses, well, you'd have stayed long the whole way.
you would.
So, that looks
But
great.
it does, but it's all hindsight. So
Well,
I'm
no,
not
but
saying
that's if
Simon
you
isn't
have
very
that as a
clever.
rule,
I said this is what I find difficult about it. It's
yeah,
all hindsight. You look at this chart, and if I had, if, but actually, I didn't see this chart. How many charts do that? And then when you
that's
get a
true.
little break in September, drop back down. So there's a sort of ascertainment bias here as well. And so that's why it doesn't work for me. It may
Yeah.
well work very well for Simon. It doesn't actually work for me,
Okay.
which is why I don't do it.
Well, but the point we're including these, Richard, is that, it's worked for him. And,
Yeah.
let's face it, the last fucking year, nothing's worked for me. So, if I'd followed Simon, I would have been all right. Anyway,
Yeah.
here we go. Another one, Coherent Corporation.
Okay. Well, rather than seeing some of the successes, let's see some of the predictions.
Yeah, but people want to go long, Richard. There's like,
Let's see some of the predictions. So where are we? What is it now that is January 2025?
well, he's saying in all these cases, like Coherent Corp, bull market intact, Lumentum Holdings, bull market intact.
Yeah, but my point is, Keith, what is it that is with this one, Lumentum? What is it that is currently in the same position as this was in January 2025, or that is, according to technical analysis, going to do extraordinarily well over the next 12 months?
Right, got you. So, well, there you go. I will ask him to find a company at the start of its enormous bull run, as opposed
Yeah.
to midway. I mean,
Yeah.
presumably, he's saying this is going to keep on rising. And I would say, as long as AI investment continues at this current rate, then its earnings are going to be great. But in
Yeah.
order for its earnings to keep on rising, AI investment would have to keep on increasing? Question mark.
Yeah.
But, so far, looking at the fundamentals has been the wrong thing to do. Buying because it's going up has been a great strategy.
Yeah, I agree. Yeah, so it's gold. I look at the chart of gold every day.
Yeah,
It baffles me.
I'm sure you do. So, well, I do now. So, I bought in, I wish I bought in, years ago, but I bought in via my gold royalty companies. And the danger is that if the equity market crashes, then gold takes a bath. But,
Yeah,
who knows? So I'm not going to, buy and sell it based on, what happened yesterday.
I agree with that.
And medium term, the US fiscal deficit scares the hell out of me.
Mm.
I just don't know how you get out of that.
No, I completely agree.
So, Richard, but while we're on silver, can you just, and you know a lot about this, why is JP Morgan saying that silver could end the year at 300?
Um, I think so. There's a few reasons. So China has stopped exporting silver. So China imports a lot of silver doré for refinement, particularly from South American countries, and it has stopped re-exporting it. And I
Right.
think that's about 300 million ounces a year. Bearing in mind, sort of mining production, annual production is around about 1,000 million ounces a year. Or rather, China has stopped re-exporting and is now also importing silver. The net effect of those two changes is about 300 million ounces a year, which is either going into China and staying, which is going into China and staying, which previously would go to China and come back out of it. We know that there's a supply deficit and has been for a number of years. We know that the demand for silver is going up, not down.
Yeah.
There is some replacement, but probably some replacement, but it's going up in terms of the electrification of the world. Battery technology is now coming that may well use silver. So there has been a massive short selling of silver. Basically, the silver price has been controlled for many years because there was a silver surplus, silver glut. The US had an enormous silver stockpile for many, many years. And that silver, which enabled the silver price to be manipulated effectively because there's vast quantities of silver sitting in warehouses that could be released into the market if need be. Which kept the manipulated safe. But there is now that silver no longer exists. It's all gone. It's all been sold. And of course, silver, unlike gold, silver is consumed and it's not
Yes.
always recovered. So there's still an awful lot of short positions which are uncovered by the commodity, by the actual metal. And those short positions, the holders of those short positions need to exit those positions. And that's really, really difficult. So there's an ongoing long-term short squeeze.
Ah, okay. Got you.
So all of those factors contribute to the necessity of the price to rise very significantly to force substitution, to force silver out of the market, and to force silver back into the market, and to try and allow the market to reach an equilibrium. I mean, there is and it is a very valuable, hugely valuable industrial commodity, which is seeing more and more uses.
Yeah. Okay. Thank you, Richard. And Simon's saying basically the silver market has, had cyclical downturn within a longer term uptrend. So
I would agree with that, not particularly by looking at the chart, but simply by
yeah.
the facts on the ground. So yeah. So I mean, all the precious metals actually got very similar shaped chart. They got that big spike up in the early start, the start of this year, and then they're basically consolidating.
Yeah.
Um,
Thank you to SimonW for all those charts.
and can I just say, Simon, my apologies. I appreciate you putting the charts in. I know I'm not overwhelmingly positive on them, but that's a personal point of view that I find charting really quite difficult.
Right. Well, I thought you were good at charting. I thought you used it.
I do use it. I use it over a very long term.
Right. Okay. Right. Well,
And I don't make short-term predictions out of it.
yeah. Well, frankly, I'd have done a lot better if I'd used it the last few years. Finally, on to good news. After all that, you need some good news. Here we go. So we continue to succeed in undoing some minor pieces of huge environmental damage we've inflicted on the world. So, conservationists in the UK, in Northern Ireland, have succeeded in eradicating invasive ferrets from Rathlin Island, which is offshore Northern Ireland. It's 6 miles long, 1.5 miles wide, and is Northern Ireland's largest bird colony, and would be an even bigger colony if the ferrets weren't eating all the chicks and the eggs. So anyway, they after 4 years they have eradicated all the ferrets using
Fantastic.
thermal drones.
Fantastic. It's a bit like Florida's python problem. Didn't Florida try to address its python problem by introducing a python predator, and now they've got a python predator problem? I believe.
Yes, that kind of
Hazy.
summarizes humanity's messing up with the
Yes. Yeah.
so because what the those cane toads
Oh yeah, in Australia.
in Australia, they were introduced to kill another predator, well, something that was eating all the crops. Anyway, yeah, we keep on doing this and messing up. But anyway, we have eradicated ferrets. Good news.
Good,
And
good.
it's a good story from the UK. Don't say that this podcast is too negative.
Do you think they vote green?
I bloody hope not. Anyway, right, concluding comments. So actually, the concluding comments are exactly the same as last time because to me, it seems there's no route for a peace deal. Ignore the headlines. Iran is essentially stringing the US along with like producing peace proposals which you know it won't accept to seem like there's a peace negotiations going on while it waits for the oil price to go nuclear. And that, when the oil price spikes, then Trump will be forced to back down. Now, the question is, will Trump get tired of this and start blowing stuff up? You'd think he will, but um, we await events. Anyway, thank you all for watching. Please can you press like and yeah, all the other stuff which I forget. And in the meantime, it is goodbye from Richard Wheater.
Goodbye from Keith Jordan. Goodbye.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.